Positive global cues helped Dalal Street end Friday at a 3-week closing high. These gains helped the market for the second straight week. Marginal gains, but gains nevertheless. Financials led from the front, with the Nifty Bank posting its biggest weekly gain in over 2 months. Hello and welcome to a fresh new edition of Taking Stock, the show where we review the week gone by, but more importantly, try and prepare you for the next week. I'm Prashant. With me over the next 30 minutes, my colleague Mangalam Malu. Mangalam, hi.
Hi Prashant, and before we talk about the market, which was really a week of two halves, let's talk about what we have on the show for all our viewers. And it's a packed show because to discuss the week on Dalal Street, we have Andrew Holland, the CEO of Aventis Alternate Strategies. And for technicals of the week, we will be joined by Jay Bala of cashthechaos.com. Also, we bring you opinion that we got through the week from the likes of Aditya Suresh of Macquarie. We had Madhu Kela, the founder of MK Ventures, Arvind Sanger. We also, had a lot of opinion come by purely on the way global markets are faring. But before all of that, let's talk about the way the markets, performed in this week itself. Prashant, you can call it a tale of two halves because between Monday and Wednesday, the Nifty actually saw a decline of about 1.5%. And it was Thursday, Friday, after the expiry, on the expiry day, and then the last trading day of the week, where we saw a big recovery from the lows, and as a result of which we saw a gain of 2.1%. You net that off and you get a gain of 0.6%, and that's exactly what the Nifty did for the entire week. 0.6% on the Nifty, and it was led ably by the Nifty Bank, which was up 4%, and that was one index which actually helped the Nifty support at the lower levels itself. The mid caps and the small caps fared worse. The small cap index was down 3.5%, and the metals index did take it on the chin as the news came by last weekend on the export duty that the government would impose, and that caused a bit of a flutter. HDFC Life was among the top Nifty gainers. In fact, the HDFC triplets, if you must, HDFC Bank, HDFC Limited, and HDFC Life. The losers were a lot more than the gainers, in the sense that the losses were a lot more. The losers lost a lot more than the gainers gained. So Divi's Labs were down 18.5% after the numbers. ONGC, Tata Steel, Asian Paints, of course, Grasim increasing their investment in the paint sector. In the mid-cap end of things as well, the losses were a lot more than there were gains for gainers. JSPL down 17%, Piramal down 14%, SAIL down 11%, but a few gainers. We had Container Corp, Interglobe Aviation, and Torrent Pharma. The broader markets that saw the most amount of pain, Prashant. Rupa was down 31% after its numbers and the top management resigning. Godavari Power down 28%, and these are cuts that I'm talking about in just 5 trading sessions. So nearly a third of the market cap of these companies eroded.
Oh, absolutely. I mean, a big week with big stock moves, right, from the mid and the small cap part of the market. Just before we go any further, Mangalam, just a couple of quick points in terms of how we are set up as we go into, as we look ahead, basically. Now, there has been a mini pivot which has happened, and this is not new, but over the last couple of weeks, right? What is the focus now? The focus 2 or 3 weeks, still about 2 or 3 weeks back, was very squarely on inflation. How much will the Fed hike? What will be the quantum of increase? What will other central banks have to do? Even the RBI here. That conversation has changed from, inflation, high inflation, and consequently what rate actions are needed, to growth concerns and recession fears. The latter is the core focus for the market now, not the former. It's reflected in bond yields, etc. The US 10 years from 3.2 is down to 2.7. So what this means, if there is really fears of recession, especially in the US, Europe, etc., is there will be dovish impulses which will come into play. The famous pause, right? I mean, we don't know. There's a question mark there, but the point is the Fed is only just starting to tighten its balance sheet, increase rates, and already markets are talking about maybe not so aggressive pace of hikes, and some are even saying a pause, etc. I think it's too early, but nevertheless, markets, of course, latch on to sort of everything in this regard. So this is very much at play. Coming to specifics, the S&P 500, if you just look at technicals, and I'm looking at the E-mini futures contract, which is at about 40.67, 40.70 right now. It looks like, the structure looks like it could get to about 43.03. Will it get to in this leg? We will see. That's about 6% away, which is meaningful. It's a tradable bounce. The dollar marked a second week of losses. The week that ended was the second week lower. It's good news for emerging markets. I mean, there were lots of bloated long positions in the dollar, and that's got cleaned out. The other thing is China, right? China has been shut out of the global supply chains, etc., markets may start to, at the margin, start trading a China reopening. It may be early with what's going on in Beijing and other cities, but nevertheless, that may come back into play. Chinese authorities, for example, are increasingly talking about much more help and stimulus, etc. Actual actions, though, have been very piecemeal. But we'll see how this one goes. It's important for commodities, metals, etc. And oil, perhaps, is a worry for a large oil importer like India. It's at $118 a barrel, and just purely charts suggest that maybe a move to the March 24th high of 123.74 isn't exactly ruled out. So that may keep things, we'll have to just watch the space, especially a market like India. And of course, oil depends